Hello, everyone. This is Jeb Hamburger from goldstocktrades.com. It's November 9th, 2011, and today I'm going to take a look at the S&P 500. As you know, today the market we had a negative day. The markets opened up this morning on news that Italy's 10-year bond yield reached a euro area high of 7.25%. After the prime minister failed to convince them that the country can slash the debts. So the yields went up and the market sold off. But from a technical perspective, what we saw here is in early October, the major reversal day. And we saw a very powerful relief rally over the past 4 weeks to the 200-day moving average. As I've written many times, the 200-day moving average is a very powerful psychological point. This is out around 126, 126.42 right now. This is at a point where people who are concerned about another decline, or who have saw the defeat suffered when we broke down here in August, are now taking whatever cash they can at this juncture at the 200-day. There will be some raising of cash at these times. Some people are going to wait to see how the markets will interact with the 200-day. As you know, the 200-day moving average amongst many technicians and fund managers has one great favor as a measurement of a long-range trend. So this is a very key psychological point. What's interesting here is that the 50-day moving average has started to slope decisively upward. So we may see a pullback to the 120 area, or to the 10-week moving average or 50-day moving average of 120, 50, 121. That may be a secondary buy point, similar to what we saw in 2010. Noticed after we saw that major bottom, we tested the 200-day. There was some profit taking. Retested that 50-day moving average or 10-week moving average, and then began and commenced its major run through 2010 all the way up until April of 2011. So we may see a pullback to this rising 10-week moving average. But we think that this bottom should hold, and that we can regain the 200-day moving average. Notice here, what I wanted to point out to my readers is that during these corrections, it's very important to look at the sectors that are making relative strength breakouts. And if you notice here, the miners versus the S&P 500, in August and September, before the Operation Twist, we saw some significant breakout in the relative strength charts of the miners. So that may indicate, when the markets do turn around, that this may be the sector that will be leading the market higher. So what we see going on in Europe right now, with Italy and Greece, is part of a bigger scheme. We believe that there's going to be further bailouts in Europe, that there's going to be further rescue funds. We're going to see increases of credit lines from global support from China and the United States, and this is going to be bullish for our natural resource and mining stock investments.